Good afternoon. It's Friday, September 23rd, about 1:45 p.m. Doing this video before the market closes today, and I'm looking at the monthly chart of the SPY. This is a 2-year monthly chart, and I wanted to, the purpose of this post, to kind of go over where the rest of the world's at compared to the American companies. And you know, I'm still kind of in a bearish camp on this, and let me just show you why. So first of all, on the SPY, you know, here at Stock Option Assassin, we focus on the S&P 500. That's what our market timing service is based off of. So I have to take in, you know, consideration what the rest of the world is doing, even though I'm typically focused on Fibonacci levels, and we'll bring those in later to kind of get some price targets. But for right now, the S&P 500, we found support around this 110 area. It's still kind of the same story, even though we, in the last few days, have been kind of crazy. We did have some nice, we closed out of our puts between yesterday and today for some great profit. And right now, we're kind of waiting for our next entry on the S&P 500, and I wanted to give you an idea of what we might be doing next. So the levels we're at is this, you know, we're still finding support, you know, around this 112, 113 area with a low around 110. This sort of, this level coincides with last summer's high, this June, July, August. And I'm putting in this last summer's low, and you'll see why. So let's look at what, you know, some of the major ETFs around the world is doing. So I'm going to go to Australia here. Australia is actually not doing too bad compared to the United States, the SPY. They're slightly into last summer, June, July, August, but, you know, nothing too crazy, even though it's a pretty ugly candle. Let's go to China. China, the second largest economy in the world, supposedly is trading, I mean, look at this, way below last summer's low. Hey, if they're slowing down, you know, it's not good. We already did Australia. Brazil, last summer's low, trading well below it, a little bit lower than the last year's low too. So you know, we're at 2-year lows with some of these ETFs. Germany, supposedly the strongest nation in the euro, it's already at last summer's low now. Russia, last summer's low. Let's look at the Dow. The Dow is actually trading better than anything else. But guess what? Half the Dow, 25% of, or excuse me, how do I say this? Half of the Dow, 25% of their, you know, business is from Europe. So if that's any, you know, if you look at Germany, if Germany's trading here, and this is any sign of, you know, the economy in the euro, the S&P and the Dow, you know, they have some room to go. So one of two things is going to happen. The point here is either we're going to catch up to the rest of the world, meaning we're going to come lower, or the world's going to catch up to us. I tend to think we're going to catch up to them, but we need confirmation. So what are we going to look for? So let's go back to the S&P, and I'm going to leave these lines here. And let's move into a little bit like a daily chart here. Let's just go in 6 months. So, you know, this 110 low, if we close below this 110 level, and let me bring in the fib here. This is kind of the last big leg down. If we close below this 109.70, you know, on a weekly or even a daily close later next week, then there's a 70% chance first that we're going to head to this 27 extension, which is about the 103 area. If you're looking for some kind of symmetry in the fib world, the 414 is what lines up with, you know, closer to last summer's low. So there's a chance we get down to 100 here. So what do? If at the end of next week, if the SPY bounces or whatever, and it closes below here, this level, then I'm going to be looking to pick up some November. I'm going to give this enough time. Some November 100 puts. These are trading about $2.50 a piece per contract right now. By the time this gets down a little farther, they'll probably be closer to $3 to $300 a contract. And I'm going to let this ride out. This is going to be a little bit of a longer trade. If we hit this 27 within a week or two, we'll probably get out, because by that point, you're going to have made 100%. But so that's kind of how we're playing it. If you have any questions, please give us a contact. We'd love some feedback on this post too. and I'll check you later. Thanks.